Time now for today's Market Movers.
Welcome to Market Movers. I'm Jim Uriel, and we're talking about the rapidly evolving world of central banking. Joining me is Chief Investment Officer of Kingsview Asset Management, Scott Martin.
Hi, Jim.
Scott, if you remember those the last week of January, first week of February, all four major central banks, the BOE, the BOJ, the ECB, and the FOMC all met. They're coming up again the first 2 weeks of March. It kind of reminds me a little bit of earnings season where each one has a level of importance. All four together have big importance.
Oh, a lot of alphabet soup there. And what does this mean for the future? Because we have a similar situation setting up. A lot of the market movements have been hinged on central bank movement in the last, say, 6 to 12 months. What happens from here?
Well, that is the question. What is the Fed going to tighten this year?
I think they're going to tighten, but I'm not so sure they tighten at the next meeting. They've promised us 3. I think we're going to get 3, but maybe not anytime soon.
And what about the overarching theme? Are we in some sort of currency war?
Well, I love a good currency war, don't we all? But there is, at least I'd say, currency battle to keep currencies, I believe, stable, Jim. I don't know if it's so much a currency war, but I think a lot of countries want stable currency versus anything.
People pose that question. Somewhat it's kind of a silly question. I know I asked it because anytime you try to weaken your currency to improve your exports, you're doing it at the expense of your trading partner. So, I mean, it's always some level of a war. Now, before we dive into our trade discussion, I'd like to point out that as with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products to manage risk or create additional trade opportunities, not as trade recommendations. Prices and movements are going to vary in these markets. Right now, we're talking about this, the 10 years trading about 125.10.
So it's been some amazing movement, if you ask me, in the ZN. So I'm looking at actually buying a call spread today, just seeing how the interest rates are behaving, seeing how they're dropping, and looking at the price inflation in ZN. So specifically the 125 half, 126 half call spread, Jim, that's going to cost you about 13 ticks or $200 with the mask reward of $800. This expires in March. It's the first week of March, March 3rd. So you have some time as you get through those central bank meetings to see how the ZN reacts to what I think could be a very interesting central bank picture.
Here's what I think you're referring to, too, is that despite the fact that those 4 central bank meetings are after the expiration date, the expectation of what's going to happen plays out 2 weeks in advance. And by the time the Fed actually reports, we rarely don't know what they're going to say. They try to be transparent. So I like what you're saying because the event is actually sometimes before that. So I'm looking at something similar. I'm looking at buying the week 1 March 126.5. 127 call spread for 4 ticks. This also goes off March 3rd. This trade was $62 to make a potential 437. What's interesting to me is that this suggests a yield going back to around 2.15, which is where it was 2 days after the election.
And what's funny about this is we're both on the same side on this trade. You're just looking for a little bit bigger pop in the price of the ZN. And looking at the charts, too, it's been kind of interesting. There's almost that W pattern that's kind of forming itself in the ZN trade. And then also with the fact of looking back to that early November movements, mine is about to the yield of November 14th. So we're in the same neighborhood with regards to how that ZN yield's going to move.
And there's 2 things here I agree with you on. I look at that same chart pattern. I think price matters and technicals matter. And I do think eventually rates are going to go up. But perhaps we're at a point where they priced in too much optimism.
Well, look what's happened to the dollar, too. The dollar has fallen off the table a good bit in the last 3 weeks.
Thank you for joining us in this special edition of Market Movers. Be sure to join us at the Traders Expo in New York on February 26th. I'm Jim Uriel, where we're helping to make you a better trader.